Okay, so now how do we get on the trend? We've discovered that we've filtered out what is a trend in this strategy's criteria: good move, shallow pullback, etc. How do we get on it? Well, there's three ways of doing it. Number one is the 20 period exponential moving average method, or SMA, whatever moving average method. The theory of this is we buy as the price touches that 20 period moving average. It's on a 1 minute chart, by the way, guys, after your trade criteria is met, and we saw those in the earlier slide. Number two, the wick method. We talked about how a candlestick is formed. So what we want to do is we're looking for a good wick to form, and we're taking a trade on the close of that bar. So if we get the pull back, we then see a candle which forms like this. In other words, we push to lows, we change direction pretty much straight away in the 1 minute. We're looking to buy after the close of that 1 minute period. That's very structured, that's very focused, that's very fixed. There's no room for ambiguity on that. And number three is the small trend line method. We wait for a break of the small downtrend line to the upside. So if this is our downtrend and we drew our trend line as we did earlier on, we're waiting for a break of this here, and we're buying that move to the upside. Anyway, let's have a look at some little examples on charts and we can visualize it a little bit better. Okay, so here's some that we've just pulled out. The 20 period moving average, we know what a moving average is. We have that on a 1 minute chart. We have a drive lower, we have a consolidation, and look at this example here. You can see we've got a little wick to the upside, or a little tail, whatever you want to call it, that's popped through that 20 period moving average. It's tagged it, just touched it. So we've got both criteria met there. And then we get the downdraft. So it's a nice short trade on that one. Similarly here, you can see we've had a good drive lower, heavy volume. I haven't put the volume on this chart, but I wouldn't have picked it out if we didn't have it. The 20 period moving average is catching up. Price comes up, touches it. We form that little tail or the little wick, and then we roll over straight away. Very nice trade setup there. Now, and that's just from the 20 EMA tag and the wick. Now, they don't have to be both together, but these examples just show when you've got two together, the power is there. Now, this line is one is trend line break and a wick. So in other words, what we do is we look for the good drive high, and there's multiple ones here. We've got a good drive high, we start to pull back, not really encroaching into the drive territory, and then we take another leg higher. Pushes up, little pullback here. This is probably the best example of it. Good drive higher, little pullback, and we take it on the break of that trend line. We take it on the break of the trend line in the direction of the trend. It's a really nice way of getting on those trending moves.